Smart money is flooding into these 5 American cities right now. While everyone else is still figuring out where to invest in 2025, savvy investors are already buying up properties and launching businesses in these explosive growth markets. These are not your typical investment destinations. These are the cities where population is surging, jobs are multiplying, and property values are climbing fast. If you want to ride the next wave of American growth, you need to know about these 5 cities. 1. Dallas-Fort Worth, Texas. Dallas-Fort Worth isn't just growing, it's exploding. This Texas powerhouse is adding more than 53,000 new jobs every single year, making it one of the fastest job creators in America. First, the population boom is incredible. The metro area now has over 8.3 million people, up from 7.6 million just 5 years ago. That's 700,000 new residents in 5 years. Fort Worth alone just crossed the 1 million resident mark in 2024. When people move this fast to an area, housing demand goes through the roof. Second, corporate America is relocating here. Major companies are moving their headquarters to Dallas-Fort Worth because of lower taxes, cheaper office space, and a massive talent pool. When Fortune 500 companies move in, they bring thousands of high-paying jobs with them. Third, the real estate numbers are solid. Home prices have remained stable with just a 0.1% increase from 2024 to 2025, which means you're not buying at a peak. You're getting in while prices are still reasonable, but demand is building fast. Fourth, it's a logistics goldmine. Dallas-Fort Worth sits at the center of America's shipping network. Amazon, FedEx, and major retailers have massive distribution centers here. This creates thousands of warehouse jobs and keeps the economy recession-proof. The math is simple. More people plus more jobs equals higher property values and better rental income. Investor tip: focus on suburbs like Frisco, Plano, and McKinney. These areas attract high-income transplants, corporate relocations, and have excellent school districts, driving rental demand and long-term appreciation. Watch out. Pay close attention to rising property taxes. Texas has no state income tax, but property taxes can run over 2% of home value annually, directly impacting your cash flow. 2. Tampa, Florida. Tampa is Florida's best-kept investment secret, and 2025 is the year smart investors are taking notice. This isn't Miami or Orlando. This is a city that's growing without the crazy price tags. First, the home values are climbing fast. Average home prices hit $430,000 in 2025, which is an 11.8% jump from last year. That's serious appreciation that puts money in your pocket every month you hold the property. Second, Florida has no state income tax. This is huge for investors and attracts high-earning professionals from New York, California, and other high-tax states. When wealthy people move to your investment city, they drive up demand for quality housing and commercial space. Third, Tampa's job market is diversifying rapidly. It's not just tourism anymore. Tech companies, healthcare systems, and financial services are setting up major operations in Tampa. This job diversity means stable rental income even when one industry has problems. Fourth, the rental market is incredibly strong. Tampa's rental demand is growing faster than new construction can keep up. High occupancy rates and rising rents mean your investment properties will generate steady cash flow from day one. Plus, Tampa survived recent hurricanes better than expected, proving its infrastructure can handle Florida's weather challenges. That's important for long-term property protection. Investor tip: look at the West Chase and Carrollwood neighborhoods. These family-friendly areas offer high rental demand, stable tenants, and room for appreciation as downtown expands. Watch out. Don't underestimate Florida's rising home insurance costs. Hurricane risk drives insurance premiums higher each year, which can eat into profits if not properly budgeted. 3. Salt Lake City, Utah. Salt Lake City is the Mountain West's investment goldmine. This city combines explosive tech growth with some of the most business-friendly policies in America. First, it's a growing tech hub. Companies like Adobe, Oracle, and many startups have operations here, attracting high-earning tech workers who need quality housing. Owning rental properties near these tech centers ensures reliable tenants who can pay higher rents. Second, Utah's business climate is unbeatable. Low taxes, minimal regulations, and pro-business government policies attract companies from expensive coastal cities. When businesses relocate, they bring employees who need places to live and spend money. Third, the outdoor lifestyle attracts young professionals. Salt Lake City sits between world-class ski resorts and hiking trails. Young, high-earning professionals love this lifestyle, and they're willing to pay premium rents to live here. Your investment properties will attract quality tenants who take care of the property. Fourth, population growth is steady and sustainable. Salt Lake City grows at about 2% per year, which is fast enough to drive housing demand, but not so fast that infrastructure can't keep up. Steady growth leads to consistent appreciation without extreme economic fluctuations. The city also has incredibly low unemployment and a diverse economy that includes tech, healthcare, and financial services. Multiple income sources mean your investments are protected even if one industry struggles. Investor tip: target South Jordan and Draper, close to tech campuses but still affordable compared to Silicon Valley standards. Tech workers want proximity with space and schools. Watch out! Salt Lake's geography limits housing supply, but rising home prices may price out some renters long-term. Monitor affordability shifts that could cap future rent growth. 4. Charlotte, North Carolina. Charlotte is the South's banking capital, and it's turning into one of America's hottest investment markets. This city has something most places don't: explosive growth with reasonable prices. First, major corporations are moving here fast. Bank of America has its headquarters here, and Wells Fargo has massive operations. But it's not just banking. Companies from expensive cities like New York and California are relocating entire divisions to Charlotte for the lower costs and skilled workforce. Second, the population is surging. Charlotte metro area adds about 50,000 new residents every year. Most of these are college-educated professionals in their prime earning years. These are exactly the tenants you want in your rental properties. Third, home prices are still reasonable compared to other major cities. You can buy investment properties here for half what they cost in cities like Seattle or Boston, but Charlotte is growing just as fast. You're getting similar growth potential for much less money up front. Fourth, Charlotte's location is perfect for business. It sits within 500 miles of half the U.S. population, making it ideal for distribution and logistics companies. The airport is a major hub, and highways connect Charlotte to every major East Coast city. The city also has excellent universities that produce skilled workers, keeping the talent pipeline flowing for years to come. Investor tip: focus on No Day, South End, and Plaza Midwood neighborhoods. These areas offer strong rental demand from young professionals, plus rapid growth tied to light rail expansions. Watch out! Traffic congestion is becoming a serious issue in fast-growing suburbs. If you're investing outside the urban core, factor in commute times as renters increasingly care about location convenience. 5. Indianapolis, Indiana. Indianapolis might surprise you, but this Midwest city is quietly becoming one of America's best investment opportunities. First, the cost of entry is incredibly low. You can buy quality investment properties here for prices that would get you nothing in most major cities. Low purchase prices mean higher cash-on-cash returns and easier financing. Second, Indianapolis has an incredibly diverse economy. Healthcare, manufacturing, logistics, and technology all have major presences here. Economic diversity means your investments are protected when individual industries face challenges. Third, the rental yields are outstanding. Indianapolis properties often generate 8% to 12% annual returns, which is double what you'll find in most major cities. High yields mean your properties pay for themselves quickly and generate positive cash flow from month one. Fourth, major infrastructure investments are transforming the city. Billions of dollars in development projects are creating new neighborhoods, improving transportation, and attracting more businesses. Infrastructure spending always drives property values higher. Indianapolis also sits at the crossroads of major highways and has excellent airport connections, making it a logistics and distribution hub for the entire Midwest. Investor tip: Broad Ripple and Fountain Square remain strong rental pockets for young professionals and healthcare workers. Great mix of affordability and steady tenant demand. Watch out. While Indy remains affordable, some older neighborhoods show slow appreciation. Stick to growth corridors tied to downtown development and healthcare expansion for best long-term gains. These 5 cities are where smart money is going in 2025. Dallas-Fort Worth for explosive job growth. Tampa for Florida lifestyle without Miami prices. Salt Lake City for tech boom potential. Charlotte for corporate relocations. Indianapolis for incredible cash flow returns. The investors who get in early always make the most money. Which of these cities interest you most? Drop a comment below and make sure you hit subscribe right now to catch the next 5 booming cities before the herd arrives. The next wave of growth is starting. Make sure you're positioned to profit from it.